G'day traders, Chris Weston, Head of Research at Pepperstone here. We're looking very much at the US midterm elections. They do pose a risk to your positions. They pose a risk to the portfolio more broadly, whether you're looking at G10 effects with the US dollar very much at the helm of this situation, or whether you're looking at US equity markets or emerging markets such as the Hang Seng or some of the Chinese markets. Very much this is an event risk for us to consider. If you have a look at the two key battlegrounds that we're very much focused on, one is the race for the Senate, and the other one is for the House of Representatives. Now, if we take the Senate to start with, there is 35 seats which are up for grabs here. 26 of those are already controlled by the Democrats and 9 from the Republican side of things. So for the Democrats to take back the Senate, we're going to need to see them reclaim all those seats that they currently have and also pick up a decent share of the Republican seats. And from what we're seeing at the moment from the polls is that the Republicans' hand within the Senate is actually probably likely to be strengthened somewhat. So therefore we need to think about what's going to happen with the House of Representatives. Now, the Democrats need to effectively pick up 25 new seats here to get a simple majority within the House. And the current polling that we're looking at from the likes of Nate Silver's 538 simple model is that they probably could pick anywhere up to 40 seats, which would give them a fairly dominant position within the House, and therefore we will see a split Congress. If you have a look at the generic ballot poll for some time, we've seen the Democrats were having a sort of 7 to 9 percentage point lead since the beginning of September. So one suspects that a split Congress is now in the price. We shouldn't see too much of reaction in markets. You say that, but not all the time we see efficient market hypothesis playing through. And what I don't think is necessary in the price is the rhetoric that would pick up from a Democrat-controlled House, where immediately they would go after Trump's tax records, immediately they would reopen the House investigation into Russia's involvement in the 2016 election. Immediately we'd start talking about impeachment process, although the chance of that actually happening is extremely low because that would need, therefore, 67% of the Senate to actually vote that through. And if that's going to be held by the Republican Party, that seems very low and that's not going to happen. So certainly that's the situation. The other cause is what actually happens if these polls are incorrect, and lo and behold we actually see a Republican clean sweep where they maintain control of both chambers. Now that isn't discounted into markets. I think if we do see that situation playing through, emerging markets will probably take a bit of a hit because the chance of Trump getting through this additional 257 billion of extra tariffs increases. You're likely to see the US dollar rally somewhat because tax 2.0 becomes a clear chance. We're likely to see that being a permanent inaction. And people actually say, what are the chances now of a sizable infrastructure plan being put into place to really boost Donald Trump's chance of getting re-elected as president in 2020. Certainly that's not being priced into markets, and I think if that does actually happen, then I think the chance of a risk-on rally in equities is very true. You're likely to see the Russell, the inward-looking market, the NASDAQ doing very nicely as well, and you may even well see US bond yields moving quite sharply higher, but we'd expect the US dollar to rally pretty sharply in that situation, specifically against some of those emerging market currencies. You may see that US dollar against the CNH, the offshore Chinese renminbi, pushing through 7 handle despite the actions from the PBOC to try and make it expensive to be short the Chinese renminbi at the moment. But in terms of what we're seeing from a split Congress, which as I say is the most likely outcome and probably discounted, you may see the US dollar struggle a little bit because the Democrats will block anything that makes Donald Trump look pretty good ahead of those 2020 elections. You may see some pullback in dollar CNH. You may see the Australian dollar outperform against the US dollar, and I'm a buyer of Aussie dollar. Should we see a break of 71.60, we may see emerging markets take some relief, even though it's discounted to an extent, from the idea that the Democrats will block any kind of tariffs playing through. But I think what we're going to have to look at for on Wednesday, Eastern Daylight Time, is the polls. The polls start opening at 9 o'clock in the morning, and they should close in the last states around 4 p.m. By probably around about 11 o'clock, 64 of the biggest competitive states, over 111 of the key competitive states, should be seen. So by about 11 o'clock Eastern Daylight Time, we should have a pretty clear understanding of how this is all playing out as the exit polls start to roll on. As we go into the latter stages of European trade or Asian trade that time on Wednesday, we should have an understanding about how this plays out. As I say, a split Congress, we shouldn't see too much reaction, although people will focus on the barrage of negative headlines that we're going to see from potentially a debt ceiling debate, a government shutdown, and of course Trump being investigated through a number of legislative issues. But of course, if we do see a realistic situation of a Republican clean sweep, you're likely to see a fairly strong reaction in markets, and therefore this is a risk to traders.